oh man, here we go.
All right.
I'm not ready yet.
Well,
You guys, we're going to be reading live from our book again today, so
yeah, we want to
get comfy.
get comfy. We want to kind of go over a couple things. So, first of all, little order of business.
Yeah.
Show this because we got two left.
Yeah, we've got a few of these left. So.
Yeah.
These are a great Christmas gift for anyone who's into Bitcoin. Boom. Open
big-
this sucker up.
Okay, the big Bitcoin book. Okay. Big Bitcoin book.
Yeah, great.
And they're all shrink wrapped. These books are printed in Pasadena.
These books were printed on these metal sheets.
Oh yeah.
How cool are these metal sheets that we printed on?
Yeah, these metal sheets are available for purchase.
Very sharp.
We have to figure out how to. We're gonna have to figure out how to make them into paintings.
We're gonna frame them.
We're gonna frame them.
We have frames, just need to figure out how to cut this sheet metal straight. So if you have any ideas on how to cut this sheet metal in some sort of straight fashion,
Yeah, so we're gonna do that. But in time for the holidays, we recommend the Big Bitcoin book. So why do we recommend it? Because it's so beautiful. I mean, look at the quality of this book. It's the only coffee table book on Bitcoin. The most beautiful, like super high production value on this book. I mean, it's very, in many cases, very minimalistic, right? Like here's the sort of Museum of Modern Art kind of picture, illustrating how many people actually own Bitcoin, right? And there you go. We're early, guys. And it's just it's a great book. Is it expensive? Yeah. This is like competing with Bitcoin is next to impossible, and kind of we know this now. But like, put some stats on the performance of meme coins this year. It's absolutely horrible. Right? So, anyways, this book, Labor of Love, it's available at bigbitcoinbook.com. It's available on Amazon. You can see it. Recommend it if you know Bitcoiners. These are the guys.
yeah, like man, what do you get for the Bitcoiner who has everything?
Yeah. My friend David Shom invented cryptocurrency, right?
Big Bitcoin book. Really nice.
Yeah.
book. If you order them today, or say from our website, we'll throw in one of these one sheets.
Okay, so explain what the one sheets are.
So basically, just got these in the mail today. Very exciting.
Can we turn the music up a little bit?
Very exciting. We just got these, and what these are. This is the Bitcoin one pager I made that we started on this last year.
Yeah.
Here's a copy for you, sir.
Thank you, sir.
So these are laminated, very high quality prints.
And the idea for these was we were in a gas station and they had all these like.
Here's a one page on economics. Here's a one pager on U.S. history, biology,
emotional intelligence.
kind of like a cheat sheet.
And
It's everything you need to know in one sheet. If you didn't go to school this semester because you were partying, then this is good for you. And this is good for the Bitcoiner who, hasn't read 100 Bitcoin
Plus, it's
books.
also really great for all these people on Bitcoin Twitter because we have these critiques and misconceptions, right? So when somebody says it's too volatile,
They're like, well, it's true, but early technologies are, and Bitcoin's still being adopted.
how about you could lose your Bitcoin?
Yeah, that's actually a feature, not a bug. That's because self-custody is self-responsibility.
Okay. What else is there?
Bitcoin mining, how it works. So the original one of these that we made only had one side to it, and it was a little bit jam-packed. It had 3 columns. It had, a lot of this stuff, but it had less of it, and it was kind of messy. This one's way more organized, and it's really clean. Everything lines up. The headings of each section line up perfectly. The data on here is amazing. So you have, on the front, you have Bitcoin in 3 dots. What makes Bitcoin different? I own Bitcoin now.
No, that's great. I own Bitcoin. Now what do I do
So
now?
people ask all the time, so what? You own Bitcoin, now what?
Okay.
Bitcoin timeline, how to get started, who is Satoshi Nakamoto? It's right here. The one who's Satoshi Nakamoto is right here on the one sheet.
Mm-hmm.
What you need to know, Bitcoin, this is how people buy it. Bitcoin's open source code, but it can't be repeated. Here's why. This is a great section. This
Very
is brand
good
new stuff.
Include this with your stocking stuffer. Or
Great
just
stuff.
slide it right into your
stocking.
yeah.
Then you have critiques and misconceptions that we talked about. What is Bitcoin mining?
Mm-hmm.
Who can mine Bitcoin? Why mining matters? Then what problem Bitcoin solves? People love asking that one. Difficulty adjustment and the halving. And then there's a QR code to learn more, go deeper, which goes to the bitcoinonepager.com website, where you can download PDFs of these and print your own to hand out at your events or whatever. I'm actually going to go to the Swan event tonight. I'm going to hand these out.
Oh yeah, you're going to
I'm going to bring some of these to Swan.
Okay.
So be a nice.
Excellent.
Little,
And we also have a second book, which you can buy on Amazon. The new book, Bitcoin 1 Million. Okay, exists in 4 versions. Paperback. This is a hardcover author's edition. Bitcoin 1 Million. It's a little funky, this one, but we have it in hardback and paperback.
Yeah, we have a hardcover here.
Okay, let's see what the hardcover looks like.
Yeah, the hardcover came out pretty nice, honestly.
Oh yeah,
one
look at this. So this
really
is the hardcover, and then you have the soft cover here. So Bitcoin 1 Million, it's they're all versioned, right? So we do make some small changes to the Bitcoin 1 Million book as we go.
As we read it, as other people read it.
And so, one of the things that we do is we read it and we notice there's little things that we need to change. And so we change them. Now,
unlike the big Bitcoin book, which we had to get perfect for the first shot.
There's no going back on the big Bitcoin book.
Yeah, those are whatever is printed for that one is all that's ever been.
It's kind of just like an art. This is more like an art piece. It's really meant to be like memorialized the 16-year anniversary of Bitcoin. That's really what this was about. 16 years, more or less. And this one actually comes in this.
Yeah, we have this beautiful. Well,
case.
we're actually not selling them in these anymore.
No, this was sort of a one-off thing.
Yeah, but we do have a few of these cases left.
Yeah,
and these look great.
Quite nice.
Yeah. Anyways, today the real point of this stream is we're wanting to read this chapter called The Psychology of HODLING, which really is about why is it so hard to hold on to Bitcoin long term? Why is that so many people do so poorly at holding on to Bitcoin long term? What's the mentality about it? Hard to hear you guys, by the way. On your feed, I don't know why.
Are you on the mic, the regular mic?
Yeah, regular mic. Yeah.
Maybe you should get on this mic.
Well, you can't get on that mic.
Oh yeah, right.
Your
Sorry.
computer.
Yeah.
This mic on. No,
Okay.
We should hook up. We should do yours from there or something like that. But
okay, so
can you guys hear us though?
If you can't hear us, you can always go to Ben's feed, and he's also.
I have a different mic, so you can go to mine and find us. Anyways, so Bitcoin 1 million. So we're going to be reading from chapter 17. We're skipping ahead.
We're skipping ahead because this is, Sam.
We were up to, what chapter were we up to?
We were on AI, in the middle of AI.
We were on chapter 14, but we're going to skip from the middle of chapter 14. Man, I love some of those chapters. We're going to have to go back and get those. But we will go back and resume for those who've been following along with all of the readings. But we're going to read today from The Psychology of HODLING, because we think it's so relevant to the market from the past few weeks. And we haven't done a reading in a few weeks. We've really been thinking about doing this one. So
go ahead.
Why don't we kick it off here? So chapter 17, The Psychology of HODLING. This chapter explores the psychological warfare of holding Bitcoin through 80% drawdowns and 1,000% rallies. You'll learn why most investors fail despite Bitcoin's 42% annual returns, how to recognize cycle patterns that transfer wealth from weak hands to strong hands, and the mental frameworks that separate Bitcoin winners from losers. Men who can be both right and sit tight are uncommon. The big money is in the sitting. Jesse Livermore. Who's Jesse Livermore?
Jesse Livermore was one of the great stock market speculators, one of the richest men in America, actually, in the 1920s.
Oh, wow.
And so he actually made apparently $100 million on the 1929 stock market crash.
On the crash?
Yeah, he was $100 million back in 1929 dollars.
Huh.
So today multiple billions he made on the crash. But he died. He actually killed himself in New York in a hotel. I can't remember why, but
Can't buy happiness.
You
He
can't
could
buy
not buy
happiness.
happiness even with his billions of dollars. I mean,
Right.
It's sad, but
so he was the ultimate sort of James Wynn of his time, basically.
shorting the market.
Shorting the market of his time.
So this chapter is actually one of the chapters that Fred wrote, and I've
Most
edited
of
it,
it.
but I didn't know the history of Jesse Livermore.
Yeah.
So a beautiful lie. On paper, hodling is easy. Buy Bitcoin, store it safely, wait, don't sell. In practice, hodling is psychological warfare. Every crash tests your resolve. Every rally tempts you to sell. Every friend who got rich trading makes you feel stupid for sitting still. Hodling Bitcoin is a psychological battle. Volatility tests your soul, but the winners stay calm. Long-term holders often experience periods of doubt during significant drawdowns, when prices decline and external voices question their investment decisions. As a longtime Bitcoin permabull, Fred is certain he'll be blamed when the next bear market starts.
I already have.
People will say, Kruger was wrong, I should have never listened, and blame him as they exit the market. Yes, there will be blood. Success requires facing the pain stoically and emerging intact on the other side.
All right, so only 10 days matter. When I met Tom Lee in Bermuda in 2019, one of the first arguments he presented to our group changed how I thought about Bitcoin forever. All the gains in Bitcoin happen in just 10 days, he explained. His data laid out with statistical precision. Because of that, just hodling, holding on for dear life, is the only way to play it. He paused, letting the implications sink in before delivering the crucial question. You have to ask yourself, do you really think you will have the ability to trade in and out of the market and be sure to catch those 10 days? His research proved what every trader eventually learns through painful experience. Those 10 specific days are scattered randomly across the calendar, unpredictable, unforeseeable, impossible to time. Miss those moments and you actually lose money. As crazy as that may sound. Here's the data. From 2017 to 2024, Bitcoin delivered 847% for the holders. However, missing the best 10 days turned that into negative 23%. Missing the best 20 days, negative 67%. Missing the best 30 days, negative 84%. A small fraction of trading days account for the majority of Bitcoin's long-term returns. Those days are completely unpredictable. They happen during Asian hours, on weekends, and most perversely in the middle of bear markets where sentiment is the darkest. I'm going to read the next one. Stairs up, elevator down. Our friend Rob Clausen noted that stocks generally follow a pattern of stairs up, elevator down, while Bitcoin is the reverse. Most of the movement is a gut-wrenching downtrend, with the up in elevators coming when you least expect them. Bitcoin's price action follows this peculiar pattern that inverts everything traditional investors expect. It crashes slowly and rallies violently, the exact opposite of stock market behavior. While equities tend to grind higher over time with sudden, sharp corrections, Bitcoin bleeds out gradually during bear markets before exploding upwards with a violence that catches everyone off guard. Bitcoin's patterns invert traditional market behavior. It crashes slowly and rallies violently. The 2018-2019 bear saw Bitcoin grind from 20,000 to 3,200 over 2 years, then explode to 64,000 in just 6 months by April of 2021. The structural pattern reflects different market forces. Bear markets bring gradual selling from miners and profit takers, while bull markets bring urgent institutional buying and short squeezes that happen too quickly for most investors to reposition. Go ahead.
Every great crash becomes a defining moment in Bitcoin's evolution, writing its own chapter in the digital currency's turbulent history. These market cycles test investor conviction and tend to separate long-term hodlers,
Yeah.
from short-term speculators. The 2013 crash set the template for all that would follow. Bitcoin soared to $1,200 on waves of early enthusiasm, then collapsed to under $200 as reality set in.
Now you were involved in Bitcoin in 20. How did
when
that?
Bitcoin first hit $1,000, it was like, oh my God, I was right. Bitcoin went, 10x from when I first had been buying it. I mean, I first saw it at $10, but I was like, this is very risky. My friend talked me out of it.
Of course.
And then when it first hit $1,000, it just felt like total euphoria. It was like, oh my God, this is insane. Hey, we should plug in. Your computer's going to die. Total euphoria. But then it crashed back down $200. I mean, can you imagine the Bitcoin price going from 100K down to 10K tomorrow?
Yeah. Well, that's what happened.
That's what happened back then. So it really felt like total insanity, and I think it went back to 1,000 that same year again. And once it hits a number,
Charlie Shrem documented it. He had a book, and he talks about what it felt like to be in 2014. And he was like, you just can't even imagine.
Oh no, 2014 was the worst. Yeah.
It was just.
That's when I stopped buying every day. I was like, this is over. This is never going anywhere. I made a big mistake. I should have never told anyone to buy it. I'm going to just ignore it. And I did until 2016. So.
It was interesting because I remember it was just like a nuclear bomb. It hit the Bitcoin kind of ecosystem.
Yeah.
And,
Well, it was the Mt. Gox and the DAO hack within a few months of each other, I think. And so it felt like nothing was ever going to work.
There was, Brock still had his little Bitropolis in my old office thing.
Mm-hmm,
and they were like, but it really felt like they were just trying to do something that was impossible. You know what I mean? Like trying to resurrect Bitcoin from the ashes. It was down to like 200, 300.
Yeah.
And I remember like everybody was so bearish.
What did you think about it then?
I was like really trying to be positive, but I just kind of felt like it was like, first of all, I felt like it was only going to be for illicit activity. That was like, I really felt like the only person who was going to buy Bitcoin was going to be a drug dealer. I really fundamentally believed that. I was like, okay, this is probably good for prostitutes and drug dealers. I couldn't think of any other kind of use case other than prostitution and drug dealing. Maybe assassination markets, I don't know. But it really was so bleak. It was the ultimate and then the regulation was starting to hit then too. I remember Brock was trying to get an ATM in there, and I was like, "Hey, can we get an ATM in Santa Monica?" I remember that thinking, "Can we get an ATM in Santa?" And then we were like, "No, we can't get an ATM." Then I remember it was like, "Well, we can get one maybe in Times Square." And then Brock was like all excited for 6 months. Like, can we get an ATM? Like, there was no way to actually get a Bitcoin ATM. It seems absolutely insane. But
it's funny because back in 2020, 2021, we drove around town trying out every ATM.
Yeah.
We went all over LA. Fred and I went.
Yeah.
We'd buy $100 worth of Bitcoin, and we'd try selling $100 worth of Bitcoin. But actually, none of the machines let you sell. They're basically buy only machines. So yeah. Anyways,
all right.
Well, so back to this.
The crash. You said the 2013 crash.
2013 crash. Yes, okay. So, media coverage during the decline emphasized Bitcoin's apparent failure and questions long-term viability. This was it, they proclaimed, the end of the cryptocurrency experiment. Yet those who bought the blood in the streets at 200 would see 100x returns within 8 years. The 2018 ICO collapse brought a very different flavor of despair. Bitcoin had reached 20,000 on retail euphoria and ICO mania, only to be dragged down to 3,200 as the house of cards collapsed. The obituaries came fast and furious. Bitcoin was declared dead over 90 times that year alone.
Yeah.
This crash felt different because it wasn't just about the price, but about broken dreams and shattered narratives. The institutional adoption everyone expected hadn't materialized. The Lightning Network wasn't ready. Nothing seemed to be working. March 2020 delivered the fastest, most violent crash yet as pandemic panic gripped global markets. Bitcoin plummeted from 9,000 to 3,800 in mere days. Liquidity vanished across all markets. Governments were printing trillions while simultaneously locking down economies. The world genuinely felt like it was ending, and Bitcoin, supposed to be digital gold, was failing its first real test as a safe haven.
Every time somebody says, hey, this is your supposed store of value, look at it going down, I always say, go back to March of 2020. Because that was exactly the argument back then. It was exactly that. Hey, how's your digital gold doing? It just lost half its literally lost half its value in like 4 days. So, I mean, honestly, like compared to that, this is nothing, man. It's just nothing. Yeah.
Yeah. So, the 2022 crash combined all the worst elements of previous collapses. FTX, once crypto's golden child, imploded in a spectacular fashion. Three Arrows Capital, managing billions, collapsed overnight. Celsius froze withdrawals, trapping customer funds. And Bitcoin hit 15,500 in November 2022. It's amazing, just 3 years ago.
Yeah.
The real capitulation didn't happen at the bottom. It came later during the long, grinding months of 2023 when Bitcoin failed to recover to new highs. The crash was one thing. Everyone expected volatility. But when month after month passed without the explosive recovery that characterized previous cycles, well, that's when people truly gave up. Morgan Stanley's survey of Gen Z interns conducted in late 2023 captured this delayed capitulation perfectly. Only 12% maintained any interest in Bitcoin. Not because of the crash itself, but because of the seemingly endless sideways action that followed. The rest had moved on to the next shiny object. Humanoid robots, traditional relationships, or simply vacations to Bali. They hadn't fled during the November 2022 panic, they'd left during the boredom of 2023. When Bitcoin spent months bouncing between 25 and 30,000 going nowhere.
Yeah, whenever you think there's this range and we're trapped in the range forever, that's exactly when you're completely convinced of it, that's when we're going to break out of the range.
Yeah. So we have the Morgan Stanley figure that Fred showed.
Yeah.
At a dinner party in mid-2024, with Bitcoin up 3x from the lows of November 2022, we were amazed that most people were unaware that Bitcoin was still a thing. The conversation turned to investments. And when we mentioned Bitcoin, the table went quiet. Didn't that crash? Isn't that dead? These were smart, successful people, doctors, lawyers, entrepreneurs. They had no idea that Bitcoin had recovered, was approaching new highs. People automatically assume that once it crashes, it will never come back. They write the obituary and they move on, missing the resurrection entirely. The recurring challenge for holders is maintaining conviction when widespread sentiment suggests Bitcoin has failed. Investors who hold through major corrections often develop stronger conviction based on their experience.
All right, let me read. The one indicator that matters. The power law boils down the entire process of HODLING to a single number, the multiple of power law trend. If the multiple is between 1 and 2, all is normal. There's nothing to do. Above 2, and we get into bubble territory. A good time to think about rebalancing or at least stacking less aggressively. Below 1, we are cheap territory, and it's optimal to stack harder or even considering adding debt to the portfolio.
By the way, someone requested that we add to the B1M site that if you're going to let's say you want to invest $100,000 in Bitcoin this year.
Yeah.
How much should you be doing per day in your DCA based on the
how far you are? Good. It's
It's
smart.
actually a good idea. Yeah.
You should definitely DCA harder below 1. And by the way, right now we're at 0.81. I looked at this today.
Yeah, exactly.
Okay, when the multiplier drops to 0.5 times the trend line, history shows we're at or near bottoms. Empirical observation across multiple cycles confirms this pattern. At 0.5x, the maximum pessimism has set in. Weak hands have capitulated and the mathematical floor emerges. These are the moments to stack hardest, when fear is highest but opportunity is greatest. This framework provides a systematic approach to investment decisions. While others panic at price drops or chase rallies, you have a mathematical framework for decision making. A 50% decline from 2x trend line represents a return to expected value. An 80% decline from 3x trend provides typical mean reversion rather than fundamental failure. Our companion website, b1m.io, and the app in the App Store, updates these metrics continuously,
Bitcoin 1 million. You can search Bitcoin 1 million in either app store and get it.
allowing you to track not just the multiplier, but dozens of other power law indicators. Download the app, set alerts for when the multiplier hits your target zones. I don't know if we have that, but and let mathematics.
We haven't built yet.
Yeah, we have not built that feature yet. And let mathematics guide your accumulation strategy. This approach focuses on systematic accumulation during favorable probability periods and prudent rebalancing during periods of extreme valuation. Action bias. Go ahead, read that.
Human beings are evolutionarily wired for action, a trait that served our ancestors well when facing immediate threats, but becomes a devastating liability in modern markets. When our investments underperform, every fiber of our being screams to make changes, to take control, to do something, anything, rather than just sit still and watch red numbers on a screen. This evolutionary bias toward action often reduces investment returns in Bitcoin. The temptation manifests in predictable ways, each more destructive than the last. Diversifying into altcoins feels like prudent risk management until you realize everything correlates with Bitcoin during drawdowns. When Bitcoin falls 50%, altcoins fall 80%. But altcoins aren't the only shiny object. Individual stocks like Nvidia beckon with their momentum. Gold itself becomes tempting. As we write this, gold has outperformed Bitcoin for the year. But statistically and logically, gold is in a secular downtrend against Bitcoin on a long chart. Right?
Yeah.
So trading feels like taking control of your destiny until you inevitably miss the crucial 10 days that determine all returns. Technical analysis provides the comforting illusion of predictability, drawing triangles and channels on charts, but Bitcoin doesn't move on resistance levels or moving addresses. It moves on adoption waves, regulatory shifts, black swan events that no chart can predict. And it moves with the money printer.
Yeah.
So the empirical evidence is overwhelming and humbling. Study after study demonstrates that traders underperform holders. And the more actively you trade, the worse your returns become. Every time I hear a story about someone's hedge fund beating Bitcoin for the year, one of my friends was telling me this recently, like, oh, why don't you have a hedge fund to trade? You could be doing that. We can raise so much money. Why don't, such and such, well, their fund's doing so well. They're beating Bitcoin. And I'm like, let's see where they are in 6 months. And of course, they're like in deep trouble. This person's like closing their fund down. They're shutting their fund down. They're paying back their investors whatever's left. They're losing time. Their trader screwed up. Can you imagine? Their trader made a mistake. Like, it's terrible stuff, man. Anyways.
Transaction fees.
Transaction fees compound silently but relentlessly. Taxes destroy gains. Short-term capital gains can take 40 to 50% of profits, while long-term holders pay 15 to 20%. Most devastatingly, traders always miss the days that matter because they're trying to be clever, sitting in cash, waiting for the perfect entry that never comes. This is my friends.
I mean, there's so many people who are saying,
so many friends, I would buy it, but I'm waiting for 70K.
I'm waiting for 40K. That's where it's. I mean, there are people out there.
I heard 70K recently.
I've heard 40K. Like, you're not going to.
Whatever price you're waiting for, it's never going there. And if it ever did, it would be so devastational that you would be afraid to buy it.
You will not buy.
You will not buy.
You will change your algorithm.
Yeah, you will not have the conviction to do it. Anyways, the impulse to actively manage positions often conflicts with the benefits of long-term holding. The most successful Bitcoin investors often share a counterintuitive trait. They maintain their positions without frequent changes. They didn't trade the cycles, didn't diversify into the altcoin of the week, didn't try to time the market with sophisticated strategies. They bought Bitcoin, stored it securely, and then committed to the most difficult act in all of investing. They did absolutely nothing. By maintaining their positions through market cycles, these investors achieved exceptional returns.
All right, I'm going to read the trading temptation. The trading success stories seduce with their spectacular numbers, promising shortcuts to wealth that bypass the boring discipline of hodling. Every cycle produces its heroes, traders who seem to have cracked the code, defied the odds, and discovered the secrets to beating the market.
I'm gonna get a coffee.
Okay. Can you give me one?
Oh,
Thanks. Defied the odds and discovered the secret to beating the market. Their stories spread like wildfire across crypto Twitter, inspiring thousands to abandon patience for leverage. Yet these legends invariably end the same way: spectacular implosion, public humiliation, and the quiet erasure of their once celebrated gains. Trading heroes to cautionary tales. Bitcoin Twitter produces trading legends every cycle. Traders who seem to have cracked the code, defying odds with spectacular returns. That's a little bit of a repeat. Their stories spread like wildfire, inspiring thousands to abandon patience for leverage. Yet these leverage legends invariably end the same way. Josh Mandel, an exceptionally gifted trader, turned a public $2 million portfolio into $30 million in 2024 using aggressive call options. When his wild prediction that Bitcoin would retrace to exactly 84,000 on March 14th, 2025 proved accurate, many declared him a time traveler with supernatural powers. When his confident prediction that MSTR would enter the S&P 500 proved wrong, the mystique evaporated. Even exceptional skill couldn't maintain that edge forever. James Wynn's story followed a darker arc. He's turned a few $1,000s in Pepe meme coin to tens of millions. His wallet briefly flashing 80 million. But he graduated to 40 times leverage on Bitcoin, a $1 billion position on Hyperliquid. In May of 2025, liquidation erased nearly 100 million instantly. His bio changed to a one word: broke. He returned with new funds. I don't know how this guy keeps on getting all this money. I think he crowdsources it somehow. Scored some new wins and suffered 9 consecutive liquidations. Another $1 million vanished. By September, he'd been eclipsed by other whales, losing even more. That self-styled legend failed into obscurity. Well, he didn't. He came back again. He's back again, shorting Bitcoin. His implosion, a reminder that leverage addiction leads to inevitable ruin. Go ahead.
The pattern never changes. This pattern repeats with clockwork regularity every cycle. Spectacular gains generate supreme confidence. Supreme confidence? Well, that leads to larger bets. Larger bets eventually meet the wrong side of volatility, and another trading hero becomes a cautionary tale. The market is littered with the corpses of brilliant traders who right 20 times in a row and wrong once. Josh Mandel's time travel couldn't save him from bad calls. James Wynn's meme coin millions couldn't survive 40 times leverage. The next cycle will produce new heroes with new strategies, and they too will eventually join the graveyard of traders who thought they discovered the secret. Even the most aggressive bulls understand this dynamic. Michael Saylor, who famously suggests that people should sell their kidneys for Bitcoin, uses surprisingly modest leverage in this corporate strategy.
He's not selling his own kidneys, I noticed.
Yeah, he's not. Despite his bombastic public persona and absolute conviction, he knows the difference between conviction and suicide. His companies borrow at low rates against assets, not at 100x leverage against positions. He's playing to survive, not to make the Forbes list next month. The mathematics of trading versus holding are merciless and inescapable. Traders must be right repeatedly about entries, exits, and everything in between. Holders must be right only once, that Bitcoin continues its long-term trajectory. And the tax implications, 50% on short-term trades versus 20% on long-term holdings in the US. The relentless drain of transaction fees and the impossibility of catching the 10 days that matter. And the conclusion becomes obvious. Traders can't win long-term. Even sophisticated strategies like Raoul Paul's recommendation to rotate between assets based on cycles sounds intelligent until you realize a fundamental truth. By the time you know you're in a bull market, Bitcoin's already doubled, and you've just become another tourist arriving late to the party.
Yeah, I mean, there's all this idea that I'm just going to wait until I'm in a bull market and then I'm going to jump in. Well, by the time you know you're in a bull market, you may not be in a bull market.
We actually had an idea like that at some point of trading on an algorithm that was like, if you're within 3% of the market top, buy. And if not, you sell the asset. So
they're basically all just momentum strategies, but none of them.
But one of our friends back tested it and found that it was bad, really bad.
Yeah,
not as good as just holding. So very funny.
All right, let me go. No need to trade. My biggest complaint about the trading culture emerging on the fringes of Bitcoin, manifesting in options plays, Bitcoin treasury companies, or excessive leverage, is it's not needed. The power law plus time is enough to generate spectacular returns. You don't need leverage. You don't need options. You don't need to time the market. You just need patience. Josh Mandel certainly has a better nose for the short-term markets than I do. But that nose is not needed to achieve spectacular investment results. In fact, the mere temptation of triple-digit trading returns goes against everything I know about Bitcoin. The power law promises 42% annual returns. Isn't that enough? Why risk those guaranteed long-term gains chasing short-term profits that may or may not materialize? The tragedy is watching investors turn a simple winning strategy into a complex losing one. Bitcoin rewards patience with life-changing wealth. The power law trend, grinding relentlessly upwards decade after decade, does the hefty lifting. All you have to do is buy, hold, and wait. Yet people insist on adding complexity, leverage that can liquidate them, options that expire worthless, trades that miss crucial days. They take a guaranteed winning lottery ticket and trade it in for a spin at the roulette wheel. Bitcoin itself is already the highest risk, highest reward asset in human history. Adding leverage to Bitcoin is like putting nitrous oxide in a rocket ship. Unnecessary and likely to blow up in your face. The base asset already delivers returns that break traditional finance models. Why isn't that enough?
Survival strategies. After observing multiple Bitcoin cycles and the investors who survived versus those who capitulated, the strategies that actually work reveal themselves to be almost insultingly simple. They require no sophisticated knowledge, no complex calculations, and no special insight. Just discipline and the right mental framework. The intellectual approach matters more than any tactical decision. Study the technology to understand what you own, not price charts that pretend to predict the unpredictable. Dollar cost average with boring regularity rather than trying to time entries and exits. Use hardware wallets not just for security, but for the psychological friction they create, making selling just difficult enough that you won't do it impulsively at 3 a.m. during a crash. Did you see that River implemented this new thing where if you have to press and hold the sell button for 5 seconds to be able to sell, and then it also shows you a video of Michael Saylor telling you should never sell your Bitcoin. So it's like huge friction on you selling. It's very, very funny. Most crucially, calibrate your timeline to decades, not months. Bitcoin is a monetary revolution, not a quarterly trade. Your environment shapes your behavior more than your intentions. Surround yourself with long-term believers who understand the technology, not traders comparing this week's gains. You can do that by joining Club Orange.
Club Orange,
Club
guys.
Orange. Go Club Orange. Mateo's on his way over here, actually.
Is he?
He's going to come in like 1:30, something like that.
Yeah.
So
So Club Orange, great app and great guy.
Great app, great. You know, Mateo and I disagree about so many things. I don't think I have enough friend in Bitcoin that I argue more with than Mateo. It's crazy. Sometimes I think he is actually insane.
He is insane.
He's kind of insane.
I think he is genuinely
some of the
insane.
things he believes, but But I really enjoy his company, and I enjoy debating with him. And we have the fundamentals. Fundamentally, we agree on Bitcoin. We just disagree on all the minutia around it. It's hilarious, though. It's just every tweet he has, I'm just like, what the fuck? Anyways, join Club Orange. Very good app. We're really
and cheap. Doesn't matter.
Yeah, it's very cheap to join. It's totally worth it. It's a great app.
It's just part of our community. Look, I think we're trying to get a community of people who have similar beliefs.
We're actually not investors in the app. We have no stake in the app. We're thinking about investing.
Yeah, we probably will.
We probably will, but we have nothing to gain by promoting this app to you, except for that we think it's great. So anyways, you want to surround yourself with Bitcoiners who understand the technology. So make Bitcoin boring and systematic rather than an obsessive focus that dominates your thoughts. Check the price monthly, not daily, certainly not hourly. The less you look, the better you perform. Strategic ignorance prevents emotional decision making. Set your expectations to match reality, not hope. Expect a 60% or greater drawdown. They've happened before and will happen again. Plan for multi-year bull markets.
We've already had a 40%.
Yeah,
40%.
Just since we've written this.
Yeah.
Plan for multi-year bear markets that test your conviction and drain your enthusiasm. Very exciting stuff, you guys.
Yeah.
When Bitcoin hits the power law floor described in Chapter 1, recognize this is the moment of maximum pain, but also optimal accumulation. Most importantly, shift your mental accounting to think in Bitcoin rather than dollars. As Nydig's head revealed, I just think in Bitcoin. Once you make this psychological shift, bear markets transform from sources of panic into accumulation opportunities. You stop asking yourself, how much is my Bitcoin worth? And start asking, how much Bitcoin can I accumulate?
All right. Deep conviction is needed. Successful Bitcoin investing requires genuine conviction based on fundamental understanding rather than speculation. Real conviction, the kind that survives 85% drawdowns and multi-year bear markets, doesn't come from just staring at price charts, drawing triangles, and multi-year bear markets. Doesn't come from staring. Let me read that again. Real conviction, the kind that survives 85% drawdowns and multi-year bear markets, doesn't come from staring at price charts or reading bullish Twitter threads. It emerges from deep fundamental understanding of what Bitcoin is and why it matters. This understanding must span multiple domains to be robust. You need to grasp the technology, why Bitcoin's design is revolutionary, how proof of work creates unforgeability, why the blockchain's simplicity is a feature, not a bug. You must understand the economics, why mathematical scarcity beats infinite money printing, how Bitcoin's supply schedule creates predictable monetary policy, why no amount of demand can create more coins. The adoption curve matters too. Network effects make Bitcoin's dominance inevitable, as each new user adds value for all existing users. Perhaps most importantly, you must understand the timeline. This is a decades-long transformation, not a get-rich-quick scheme measured in months. The 2017 cycle revealed how shallow conviction crumbles under pressure. That generation of Bitcoin evangelists understood the technology brilliantly. They could all explain blockchain, debate scaling solutions, and envision a future of widespread adoption. But when Bitcoin fell 85% from its peak and stayed down for 2 agonizing years, their intellectual understanding couldn't sustain their emotional fortitude. They stopped believing the future they had so eloquently described was actually possible. The bear market didn't change Bitcoin fundamentals, but it shattered their faith. This tragedy became complete when Bitcoin rallied in 2020, 2021. The formal evangelists had already moved on to a new narrative, DeFi, Web3, the metaverse, missing the exact institutional adoption wave they had predicted earlier.
Sure.
They had been right about everything except their own ability to endure the wait. And you know what? People who raised a lot of money and survived, they actually became the most skeptical, like Vinny Lingham, So he raised all this money for Civic, and then he became like,
He became kind of anti-Bitcoin.
He kind of became anti-Bitcoin.
He was on the board of the Bitcoin Foundation, total huge Bitcoiner. Then he created his own cryptocurrency, made a bunch of money, and then lost his faith completely.
So conviction develops develops from an understanding of Bitcoin's fundamental properties: scarcity, decentralization, and network adoption. The market tends to reward patient, long-term holders more than frequent traders. Now, why don't you read the case of Bitcoin Tina? This is a good one.
One of the most recent casualties of Bitcoin Twitter was the spectacular blowup of Bitcoin TINA in 2022. This hardcore Bitcoin devotee had 100% of his net worth in Bitcoin during the 2020 to 2021 bull market and used the name Tina to hammer in the idea that there is no alternative. His extreme bullishness became legendary. Every tweet reinforced the message that Bitcoin was the only asset worth owning. This extreme bullishness was dealt a death blow by the 2022 bear market. Tina panicked and sold all his Bitcoin at essentially the low point of the cycle. The man who preached, there is no alternative, had found an alternative, cash. At the worst possible moment. He has subsequently built up a small position, but he is shaken. He's a shaken man, and he's clearly no longer believes in Bitcoin the way he used to. The Tina story illustrates a crucial lesson. Extreme conviction without risk management is just gambling with extra steps. Having 100% of your net worth in any asset, including Bitcoin, creates psychological pressure that can break even the strongest believer. When your entire financial existence depends on daily price movements, conviction transforms into fragility. The very extremism that made Tina famous also guaranteed his capitulation. To be fair, an all-in approach is far easier for a young hodler with steady income who can weather drawdowns and rebuild. For a retiree like Tina, with no income stream to cushion losses or buy dips, the psychological pressure of watching your entire retirement evaporate becomes unbearable. Age and circumstances matter. What's bold at 30 becomes reckless at 60. Pain psychology. Every asset has its own pain points, with real estate being the easiest to hold psychologically and Bitcoin the hardest. Stock portfolios sit somewhere in between, volatile enough to cause anxiety, but stable enough to feel somewhat secure. Real estate offers psychological comfort that Bitcoin deliberately denies. With property, you own something undeniably physical. You can walk through it, touch the walls, plant a garden. Rent checks arrive monthly, providing tangible proof your investment is working. Until they don't. Yeah. Until they don't come, and then you have to evict someone. Jesus Christ. Excuse me, but you know.
There are very few people who have transitioned from real estate to Bitcoin. Very few. There are a few, but they're very few. That's why, like, Grant Cardone.
We actually met with a guy. Who's a very big real estate holder here in Santa Monica. Like, very big real estate holder, and a major Bitcoiner last week.
Yep.
So
there are a few, but they're not common.
They're generally going to. I mean, they're almost 100% of them are going to be under the age of 50.
Yeah.
So
Grant's the only exception.
Grant is the only exception. Yeah. Very interesting. Rent checks arrive monthly. Society reinforces your decision constantly. Everyone from your parents to your banker agrees real estate is solid. The entire culture whispers that property never really goes down. You've made the mature, responsible choice. Bitcoin, by contrast, is engineered for psychological torture. Your phone buzzes with price notifications at 3 a.m. Each alert a test of your resolve. There's nothing physical to grasp when doubt creeps in. No deed to hold, no building to visit, no tenants to remind you of value. Bitcoin generates no yield, pays no dividends, provides no monthly income to smooth the volatility. Instead, you get pure, concentrated uncertainty. Violent price swings, regulatory threats, and technical debates you barely understand. The constant whisper that you're a fool chasing digital tools.
And you get James Wynn. If you invest in real estate, you don't have Bitcoin Twitter with James Wynn telling you that he's going to crush you and is going to drive your real estate to zero.
Yeah.
But with Bitcoin, you get these guys. They're there. They're all sitting there saying it's an absolute Ponzi scheme. It's tulips. It's going to crash. It's going to zero. I'll buy it back cheaper. You never see that in real estate.
The way you can get a yield on Bitcoin, you can take monthly distributions of your Bitcoin by not by selling though, but by borrowing against it.
Right.
And there's lots of platforms, and there are more coming that allow you to do this in more jurisdictions. And basically, either you live in a jurisdiction that supports it today with cash, or you have to use stablecoins. If you use a stablecoin platform like Aave or like HODL or Libre, which I built, then you could use anywhere in the world anytime, right? But if you want cash in your bank account right away, then you have to use one of the centralized lenders, and those are jurisdictionally limited. But we also have just started a hedge fund that we're getting up and running now. Basically got it up like a couple days ago.
Yeah.
That does provide a managed Bitcoin leverage strategy where we are going to borrow against Bitcoin and target no selling of Bitcoin, but pay a monthly, essentially 1% of a return of capital, which is tax deferred. So pretty cool.
Yep. We'll go over that separately. But,
yeah.
But look, you can achieve a yield. You can.
You can without selling.
Selling.
If you know how to manage your borrowing really well. Yeah, I lost where I was now.
The market appears to compensate investors.
Yeah, the market appears to compensate investors for the psychological challenges of holding volatile assets. Real estate delivers 5 to 7% annual returns wrapped in social approval and emotional comfort. Bitcoin delivers 42% annual returns wrapped in sleepless nights and social skepticism. Higher returns may reflect compensation for the psychological difficulty of holding volatile assets through significant price swings. Maintaining positions through significant declines in social skepticism may be necessary to capture Bitcoin's long-term returns. The psychological challenges are inherent to the investment experience. They are the cost of admission to life-changing returns. Many investors cannot tolerate Bitcoin's volatility and social uncertainty, preferring lower returns with greater psychological comfort. It never has, and it never will.
All right, let me read the next part. Strong hands transfer. Every Bitcoin cycle orchestrates I really think we should change it to not talk about Bitcoin cycle because I don't want to indicate that we are adopting the 4-year cycle.
Yeah, that's true.
So we should spend 5 minutes after this and just kind of clean this up a little bit for the next version.
We do have a few points we're talking about the cycle.
Yeah, I don't like the word cycle.
We're kind of we don't even know if cycles ever actually existed. It's kind of one of our.
There's bull markets and bear markets, that's for sure.
But yeah.
But cycle implies that there's a 4-year pattern, which is not. Strong hand cycle. Every Bitcoin cycle orchestrates a massive transfer of wealth, but not in the direction most expect. The coins don't flow from rich to poor or from institutions to individuals. The meek will not inherit the earth. Instead, they move relentlessly from weak hands to strong hands, from those who think in months to those who think in decades, from the impatient to the patient. The historical pattern is clear and consistent. In 2011, weak hands bought at $30, sold to early visionaries at $2, unable to stomach the 95% drawdown. That was the ultimate drawdown, by the way. And Hal Finney, in his last post, said, I survived the 2011 crash. Those visionaries are now billionaires. In 2017, retail investors who bought the hype at $20,000 sold to investors at $3,000, crystallizing massive losses just before the next explosive rally. In 2022, leveraged speculators who thought they were geniuses at $69,000 sold to quiet accumulators at $15,500, transferring their coins to those who understood the cycle. Because Bitcoin's supply is absolutely fixed at 21 million coins, every transfer has profound implications. Every cycle doesn't just move coins, it permanently tightens the available float. The strong hands grow stronger with each cycle, accumulating larger positions at lower costs. The patient inherit the coins of the impatient, building generational wealth from others' panic. Warren Buffett ironically hates Bitcoin, while his most famous wisdom describes it perfectly. The stock market is just as a device for transferring money from the impatient to the patient. Bitcoin is that device on steroids, amplified by greater volatility and truly finite supply.
Bitcoin changes you. There comes a moment in every serious Bitcoin investor's journey when a fundamental shift occurs. HODLIng stops being something you do and becomes something you are. This transformation doesn't happen overnight, but emerges gradually through cycles of pain and understanding that one day, until you realize you've become a different type of investor entirely. The external signs of this shift are subtle but profound. You stop checking the price every hour, then every day, and sometimes you forget to check for weeks. Your mental accounting naturally shifts from dollars to Bitcoin. You think about purchases in sats, measure wealth in decimal points of Bitcoin, and evaluate opportunities by how much Bitcoin they'll generate. When friends ask about the price, you genuinely have to check because you no longer track it obsessively. This is the moment you cross from speculation to genuine conviction. HODLING is no longer a strategy you're employing or a position you're managing. It has become core to your identity. You are a Bitcoiner in the same way someone might be a parent or a professional. It's simply who you are. The noise that once consumed you, the price predictions, technical analysis, the crypto Twitter drama fades to background static, and the volatility that once kept you awake at night becomes as unremarkable as weather patterns. You're playing a completely different game with different rules, different scorekeeping, and most importantly, a different timeline that stretches decades into the future.
Anyways, that was the psychology of hodling. It really is the most important.
Such a great chapter. Every chapter of this book is so unique.
But this is really about the art of doing nothing. Larry Lepard had a great little thing where he said, let me see if I can find that thing. Well, I can't sort of find it. Look, maybe I can. Larry Lepard.
Just give us the gist of it.
Well, the gist of it was, let me see. I think I retweeted it. Let me just see if I did. I really liked his comment. It was here we go. It's kind of ironic that the simplest and best way to get rich is to do absolutely nothing. You just buy Bitcoin and forget about it. Go live your life. Go paint. Go out. Do whatever. Do what your God talents is doing, and that's it.
Well, let's talk a little bit about what next year could look like for Bitcoin. Okay. So there's sort of three scenarios.
Right
for next year. Either Bitcoin continues going sideways between, 90 and 120, basically, just bopping between those two.
Possible.
Totally possible. Or it keeps declining down slowly to, 60,000.
Possible.
Or it skyrockets up to 300,000.
Yep.
One of those three things is going to happen. Nothing else is going to happen. It's not going to go to zero.
No.
It's not going to go to 10K. It's not going to go below 60. So forget it. I really doubt it's going to go below 80. But, which of those things do you think is the most likely? It shouldn't even matter, honestly. It should just be DCAing no matter what. So, it's funny because we talked to a very wealthy VC guy 2 days ago. He's a friend of ours here in LA who already probably has quite a bit of Bitcoin, but he told us he's DCAing every day.
Buys on Coinbase.
He just buys on Coinbase. He has a recurring buy on Coinbase every day. Of course, we told him we should use River or Swan or some other, platform that's cheaper.
He doesn't care.
But he actually doesn't care. He's just like, this is what I have set up, and I move it to my hardware wallet or whatever, my secure storage. But, that's kind of it. We, either we're going to have a really great rise next year. We're either going to go, or we'll go sideways, or we'll go slightly down. That's kind of the only three things that can happen.
But it's very possible that we sit here and we're going to be at 250,000 a year from now. It's very, very possible. I would say it's probably likely now that we've got Vanguard in, Merrill, Bank of America. Oh, by the way, Schwab announced today that they're going to be doing actual Bitcoin trading Q1. They're going to start. You'll be actually able to hold your actual Bitcoin in Schwab. So this whole, I think 2026.
We should totally do it. We should totally do a video on what to look forward for next year.
Yeah,
we'll do it in a couple weeks.
Anyways, let's sign off. But anyways, happy Bitcoining, guys. Get the book. Just a reminder: Bitcoin 1 million.
1 million. Big
Stocking
Bitcoin
stuffer. Book. Big Bitcoin book. Great. High. It's an expensive book, but it's a great book for the Bitcoiner in your life, or to orange pill your girlfriend. It's sort of you might get in the doghouse. She's like probably expecting some kind of I don't know, flowers, lingerie, or something. You get her a Bitcoin book. It's it's a little bit like buying a doghouse, but it's like buying her a tool set or something. But honey, I love Bitcoin, but.
I love you and I love Bitcoin. What a great, it'd be great if you love Bitcoin.
Then you can understand me, But so if you get in the doghouse, don't
Don't blame us.
Don't blame us. And then, of course, the newest edition, which is the Bitcoin 101 cheat sheet, available.
Coming to a car wash near you.
Yeah, we are. And
I'm gonna try to take these to the car
if you
wash.
come to the Swan event today in Orange County, Ben and Mateo will be.
Some of these
We'll have some of these bad boys, and you can get some. We should have a way of kind of ordering like 10 of them, so you can just hand them out. That's what we should do.
I have a.
Like a 10 pack.
You can honestly just print them yourself.
But they're laminated.
But
they're nice.
If you want to buy the laminated, I'm only shipping minimum of 100. Okay, you can buy 100 minimum. That's it.
But that's not bad. I mean, how much does it cost to get 100?
Honestly, the printer Javier sent me these, and I asked him for one demo example, and he's like, "I got you." And he sent me probably 1,000 of these. I haven't seen the bill yet, so I don't know how much they cost, but it's going to be probably a couple bucks each.
Okay, so if you want to spend $100, or if you want to spend $100 and get a bunch of these things to hand out in your community, I recommend it because I think this is kind of
it's kind of like a restaurant menu,
and
it's like a Denny's menu.
You can spill coffee on it.
Yeah,
it's very it doesn't matter.
Yeah, well, you
so people will probably keep it around. They'll probably put it in their desk, but it'll survive where a piece of paper will not. So I like the fact that it's kind of durable.
It's got two sides, lovely. But you can download this at bitcoinonepager.com. Bitcoinonepager.com.
But anyways, the laminated version could be good too, as an orange pilling thing. And the content is great, I have to say. All right, guys, that's it for chapter 17. We're going to go back at some point soon before we'll finish the whole book before the holidays. But we have to go back to AI and finish that because that was a really long chapter. And actually, we've learned a lot. We've learned a lot about AI since then. But
government, one of my favorite chapters, government, very good chapter. We have to read that one. And
did we read quantum? I think we did.
We didn't do. Oh no, we didn't do quantum yet.
Okay.
That's chapter 15. That's after.
Yeah.
AI.
So governments.
So 15. Next up we have AI, quantum, governments. Then we'll skip psychology of holding.
Because we did it.
Then what's 18?
Kelly criteria.
Oh, Kelly. Oh wow, good.
I might actually do that one on the board. And kind of just,
that would be great. Another Kelly class.
Yeah, a little Kelly class.
We have a guy who sent us a spreadsheet as well.
Yeah.
He did a Kelly.
It's sort of more advanced.
Advanced Kelly that we have to review too. So
we can look at that, and then we have Bitcoin-backed loans, and then we get to sort of the two final chapters: Bitcoin 1 million and Bitcoin 10 million, and that is the book. So we'll update it. I noticed some. Not inaccuracies on this thing, but a few repetitions as I read this chapter. So Ben and I will quickly update that, and we'll see you guys later. Happy Bitcoining. Talk to you guys later. Okay. I ended mine.
All right, we'll end it.